Can we look at opening a business as an investment as well?
We can. It's a risky investment, of course.
Yeah.
Okay. Again, with bigger risks come bigger returns. Okay. Or potential bigger returns, potential greater rewards. What I will say is that if you are entrepreneurial minded, go for it. Okay. But what I will also say is that being an entrepreneur is a big buzzword at the moment for the last couple of years, and it will continue for a while. It's cool to be an entrepreneur now. It's cool to struggle.
Yeah.
Until you're actually struggling, do you only realize how uncool it is.
It is.
Okay. So when you don't know how you're going to pay rent at the end of this month for this fancy office that you've managed to take out,
it's not so cool anymore.
Not so cool anymore.
Yeah.
So if you're going to go and open your own business and that's going to be your investment, what is the exit plan? It might sound stupid from the beginning, saying, how do I exit this? But in all business decisions that I make going forward, I've made some mistakes, of course, but going forward, how am I entering this situation, whatever that situation is, partners, no partners, suppliers, no suppliers, whatever it is, and where are the off-ramps? Yeah. Where are the exit points here? Yeah. At what point do I sell off? At what point do I say it's enough? Yeah. That has to be considered. And I know you read these things where people say, I'm so passionate about it, I'm going to do it no matter what. And yes, I respect that. Yeah. But the reality is you've got to be a very special individual to just say you're going for it. So yeah, and why I say the exit points is because that's where you're talking about is an investment. Yeah. That investment can be realized if you know that you've got a buyer should you reach X amount of sales. Yeah. And that's possible to set up in the beginning. But that comes with some negotiating skills. You've got to be able to have a conversation. You've got to be astute when it comes to business. Or you've got to have someone you trust to advise you. Who can help you. Who's going to ask for something. Yep. And there's no such thing as a free lunch. So if someone's advising you for free, best believe there's probably something in it along the way. Yeah. It may be worth it, but ask them, what is in it for you? Yeah. Are you just wanting to mentor me? And if that's the case, fantastic. But it's very important that you understand the implications of decisions that you make. Yeah.
So speaking on business, we have a viewer who sent their question regarding them being in business with a partner. The partner they went their separate ways, but even after that,
some sort of fallout or whatever.
Yeah, they had their own fights and split. Okay. And after that, the partner went and built up some debt on the business account. Okay, sure. So she wants to know, how does that affect her credit score?
Okay, so first things first, it's going to negatively impact your credit score, unfortunately. Okay. How you can get away, not away, but how you can ensure it doesn't happen going forward is to set up from the beginning what is going to happen in any eventuality. Okay. And the biggest thing when you're starting a business is we're all so excited about selling or doing what we're doing. We're passionate about it, and that's great. But don't forget that you need a founding statement. Okay. So let's say you're starting a PTY Limited. You register it. It's very easy. It's quick. It's done in a few minutes. Yeah. You've got your company. You've got your partners. You've got your directors. Everything's great. The founding statement needs to accompany that. Okay. That founding statement must talk to what happens when this person dies. What happens when we open a bank account? Must we all sign together, or do we just need Sheldon's signature? Okay. Or how's it going to work? Okay. And I think that is so important to have in place from the beginning. It avoids these kind of situations happening. It also protects all the shareholders, and the founders. Because remember, with a private company, as shareholders, there's an element of liability there. There's debt that needs to be paid. You as the shareholders you have a responsibility. And that's just from the structure of the PTY Limited, unlike a CC, which you can no longer open new CCs where there was limited liability, where the members, which what CC directors are called members, there's limited liability, so you can rack up debt and then close a CC, and the CC owns that money, but not me as the individual. Okay, so creditors can come after the individuals, but there's more to it in that regard. Whereas with a private company, the creditors can come directly after the individual. And you'll see often when you sign for credit, there's a surety clause of who's signing surety, that should this debt not be able to be paid,
this person,
which people are signing for it.
Okay. So the lesson learned here is that right from the beginning, when we're excited, starting businesses off, we need to ensure that everything is in place, documented.
Take a step back, sit down, consult with an outsider who doesn't have an emotional attachment to the business.
To either of you.
Because I'm a firm believer with any business that you get involved in, you need to be emotionally invested.
Yeah.
You need passionate about what you're doing. But with that comes, when you're passionate about something and you're emotional about something,
you might neglect important
your judgment
things.
can be clouded, you make irrational choices, and you just get it done because you're so excited about doing it.
Yeah.
Sit back, get it sorted. Then when something does go wrong, what if? Something will go wrong in your business. Sooner or later, it will go wrong.
Yeah.
When it does go wrong, then you know what the implications are.
Oh,
yeah.
okay. Thank you so much. We're moving now to tax.